So, what if I told you that keeping all of your money in the bank has nothing to do with being responsible? High earning African immigrant women, here is the truth. The fear of losing money is costing you more wealth than any bad investment ever could. I know this because I built a multi seven figure net worth starting late at 35. And the single biggest shift that changed everything for me was learning that cash sitting in a savings account is not safety, it is loss. You have 10,000 or 20,000 or maybe even $50,000 sitting in your checking account or your savings account right now. You check it constantly, you feel anxious about moving that money, and you say, at least it's safe, because that's what I used to say. At least I can see it. But here is what nobody tells us: that safety is an illusion. While you are protecting it from imaginary threat, inflation is stealing from you every single day. So your $20,000 today, it might be worth $18,400 in 3 years just from inflation alone. The fear of losing money is costing you more wealth than any bad investment ever could. We watched our parents get scammed back home. We watched uncles lose their land to fake deals. So when we came to America thinking, I'll just keep my money where I can see it, in the bank. But the system here wants you to think that way, because while you're keeping your money safe in a 0.01% savings account, the bank is lending your money out at 7%, 12%, 22% interest, and they are building wealth from your money. You are doing exactly what the system wants: staying safe and staying broke. So in this video, I'm going to show you why keeping too much cash is the laziest thing you can ever do with money, the emergency fund trap that's keeping you broke, and the real number you should have. Number 3, why having too much money in one account is making you spend more, not less. And number 4, the insurance limit no one tells you about. How do you intend to win a game when you don't know the American financial system? You don't know the rules of the game. Wealth is built using systems. So for the next 45 days, I am giving you 45 systems and structures to set up before December 31st so that 2026 is not another year of goals. And this is day 7. So back to the video. Wealthy American families are teaching their children the opposite. Don't keep cash sitting, make it work. Invest early. Compound interest is your friend. 2 completely different playbooks. We got the fear playbook, they got the wealth playbook. And here is the part that gets me really upset. The system benefits from your fear. Think about it. Let me show you exactly how much keeping too much cash is costing you. Let's say you have about $20,000 sitting in a savings account earning 0.01% interest. Here is what actually happens. Over 10 years at 0.01% interest. Option 1, you keep it safe in a savings account. So by year 1, you have $20,000. By year 5, you have $20,010. You earn $10 in interest. And by year 10, you have $20,020. But wait, inflation averages at about 3% a year. So your $20,000 is now worth $14,800 in purchasing power. You lost $5,000 just by keeping it safe. But option number 2, you invest it in a simple S&P 500 index fund. Historically 10% average return. That's the total market. Year 1, you would have $22,000 because of that 10%. By year 5, about $32,000. And by year 10, about $51,000. You gained $31,000 approximately. That same $20,000, 2 different outcomes. One strategy lost you $5,000. The other strategy gained you $31,000. That's a $36,000 difference. I'm approximating all these numbers. You are letting the bank build wealth from your fear, and that is not safety, that's ignorance. So how much cash should you really keep? Here is the rule I teach every immigrant woman that I coach. Tier 1, the emergency fund, about 3 to 6 months of your expenses. This is your only cash that stays liquid. If your monthly expenses are about $4,000, this means out of all of your basic survival necessities, survival. So I'm talking about rent, transportation, utilities, and food. Then your emergency fund should be between $12,000 and $24,000. That is 3 to 6 months of stash in case you cannot work for that time being. Then you keep this in a high yielding savings account, not your checking account. Right now, high yield savings account pay about 4 to 5% interest. I use Ally and American Express. That's about 400 to 500 times better than your 0.01% checking account. Tier 2, your short-term goals. So this is money that you need in the next 1 to 2 years. A down payment for a house, a down payment for a car purchase, or a payment for a car purchase, major expense that you know is coming. Put this in a high yielding savings account or an index universal life. I have used this since 2019 for all of my major investment. Tier 3, everything else needs to be invested. Any money you don't need for the next 3 years plus, it should not be sitting in your checking account. It should be in an index fund, S&P 500 total market, or in a Roth IRA, tax-free growth, real estate, rental properties, or REIT, in your IUL, tax-free cash value growth. Here is what this looks like in practice. Let's say you have $40,000 saved. The old way, you can put all of it in your checking account and it's earning 0.01%, losing a lot of money to inflation every year. But the new way that I'm teaching you right now is called strategic allocation. $15,000 in emergency fund in a high yielding savings account at about 4%. $5,000 in a short-term goal account, and $20,000 invested in an index fund, a Roth IRA. And this means the same 40,000, but completely different outcome. One builds wealth, the other one bleeds wealth. So this is a system that the top 1% are using. And here is the hardest part. Because even after I show you the math, your nervous system is probably still screaming. But what if I lose it? What if the market crashes? What if I need it and it's tied up? That is exactly how I was before I started investing. So let me address each of those fears. Fear number 1. What if I lose it in the stock market? The S&P 500 was launched in 1957, so it's about 68 years old. Even with its 3 major crashes, long-term investors have come out ahead. You only lose if you panic and sell during a crash. Fear number 2. What if I need the money and it's tied up somewhere? That's why you keep 3 to 6 months in your emergency fund. That money is always accessible at all times. Everything else you don't touch for 5+ years. Fear number 3. What if the market crashes right after I invest? Then you buy more. When have you ever run away from sales or discount? You buy more during sales and discount. Crashes are sales for long-term investors. Wealthy people don't panic during crashes. They buy more quality stocks. So here is the shift. You're not risking your money by investing. You are protecting your money from inflation. Cash is guaranteed to lose value due to inflation, but investment grows value historically. So which one is actually riskier? That's the mental shift. And if you need someone who has walked in your shoes, understands the culture, the pressure, and the sacrifice to walk through your exact numbers with you, my free call is open and the link is in the description. Reason number 3, having too much cash actually makes you spend more. This one really surprised me when I discovered it. Having too much cash sitting in your account actually tricks you into spending more. Here is how that happens. You check your bank account and you saw like $15,000 sitting there. And then your brain goes, oh, I have lots of money. So you go out and you spend and you spend and you spend on impulse because in your head, you're thinking you still have a lot of money in the bank account. I'm still very rich. That money wasn't actually meant for spending. Most of it was for your emergency fund. Some of it was probably for your first down payment for your home or money that you had not figured out what to do with it yet. But because it's all lumped up together in this one account and you see this huge size of amount, so you spend it. The key is making sure that your money is out of sight before you spend it unnecessarily. If you watch my video of the 5 accounts that every immigrant woman must have, you are so much less likely to make those impulse decisions. I have linked that video in the description. Reason number 4, insurance won't cover you if you save too much. There's a limit to how much the government will protect you if your bank goes under. In the US here, the FDIC insures up to $250,000 per person per bank. So if you're thinking, okay, well, I'm nowhere near that limit, then you're probably fine. But if you are approaching or exceeding these amounts in one single account, you are taking unnecessary risk. Now, you might be saving this money for a goal that is happening, let's say in the next 5 years, which is why you don't want to invest it, because that 5-year rule matters, because the stock market can be incredibly volatile in the short term. Your investment might be $50,000 today, then literally 24 hours later it's 45,000, and a month after it's 55,000 after that. If you need that money in 2 years for maybe a house down payment or any kind of investment, and you cannot afford to risk it by being in a dip right when you need it, because then you'll be forced to sell at a loss, which defeats the whole point of investing. I have personally been in this situation at least 5 times. So in this case, I use my Index Universal Life policy. Here is how that works. Your cash value grows based on a stock market index like the S&P 500. But when the market goes up, you participate in the gains, usually capped at 10 to 12%, depending on the company. And when the market crashes, your money does not lose value. So it stays at 0% or it earns a guaranteed minimum of 1 to 2%. So you get the market growth without the market risk or crash. But here is a real game changer. You can borrow against your cash value tax-free with no credit check, no mandatory repayment schedule, and your money keeps growing even while you borrowed it. It's like having your own personal bank. I've used it many times to fund all the down payments on my rental properties and business acquisition and emergency expenses without touching my emergency fund. Plus, you get life insurance protection. So if something happens to you, your family gets a tax-free payout. It's wealth building on steroids, life insurance, and your own bank all in one policy. And it's exactly how wealthy families protect their money from market volatility while keeping it accessible for opportunities. If you want to learn more about this, let me know, because I've had this since 2019 and I can tell you my own personal experience of it. So here is your action plan for this week. Step 1, calculate how much cash you currently have. Calculate your emergency fund target. This should take you about 10 minutes. Your monthly expenses times 3 will give you your minimum emergency fund. Step 2, calculate your emergency fund target. Your emergency fund of 3 months or 6 months should be sitting in a high-yielding savings account. This system protects you from going into debt for any kind of emergency. Step number 4, open an investment account. If you don't have one yet, you can open a Roth IRA for retirement, tax-free growth, brokerage account for your general investing. Platforms like Vanguard, Fidelity, and Charles Schwab. I have Fidelity. Step 5, invest your first $500 to $1,000. Start small. You don't need to invest everything at once. Pick one simple index fund. Set up automatic monthly transfer to those accounts, because you cannot rely on motivation or your willpower. The total time to do all of this is about 2.5 hours. That's all it takes for you to stop the bleeding and start building wealth. And if you need any kind of help when it comes to this, I have a free call open that you can book. The link is in the description. On that call, you will calculate your emergency fund target, and I'll show you exactly where I would invest if I were in your shoes. So day 7 done. Comment down below, day 7 done, and share this with one immigrant woman so that we can build our community together. Thank you so much for watching, and I see you tomorrow, day 8.